What up, everybody? Welcome to another class full of gems here at SMC. So today we're looking at last week's action on Nasdaq. Actually, how the week ended on Friday. And so coming into the market, this is what you see. Nasdaq is on the left. That's what we'll be trading on. You know, we got the S&P 500 on the right, and we can see what that looks like at the time. So this is what they both look like. And you know, on the S&P, let's show the S&P real quick so we get some background knowledge. What it did was, you know, it found its way back and to running all-time highs. That's something we said would happen even last week, even before last week. We talked about being bullish on indices into for S&P to run all-time highs here. But last week specifically, I said I expect S&P to go all-time highs, but I think Nasdaq is going to stay in a range. And at the time of this back test right here, you can see this is Friday. We're entering Friday now, and we did what? We literally stayed in the range the whole week. So, you know, we really could predict chop, and there's a lot of reasons why I said that. I did detail that last week in class. Maybe I'll spin back and like reiterate, but for now, I'm gonna move on from that point on how we knew that we would range all last week. Like we called out the range before it happened, not after it happens. So I'll get back to that. But my point is, anyways, the S&P runs all-time highs, but we're also noticing that the Nasdaq is very far away from their all-time highs, all the way up there, right? So what is a potential that could happen right here, everybody? Anybody in the chat can tell me what could potentially happen in this scenario where the S&P ran all-time highs and the Nasdaq is so far away from that very same all-time high target. What's something that could potentially happen here? Anybody in the chat who's been here for even more than a week. So Moses said dump skis. We definitely could dump, right? But what is it called? Like, what is that concept called that I'm getting at right now? Thank you. A divergence, a SMT divergence. Good stuff, people in the chat. Appreciate chat. So we could see SMT divergence. And for my new people in here, that's just when correlated tickers like the Nasdaq and the S&P are doing different things at specific highs and lows. So like if we're looking at all-time highs on S&P and we're seeing the S&P run all-time highs, but the Nasdaq fails to run all-time highs, that's a signal for a potential like reversal that could happen in the market right now. And so that's something that we were looking at heading into this day, this Friday morning right here. All right, cool. Now, when I get to a chart, of course, I'm always doing analysis from the top down, but you know, I already told you guys I was expecting price to stay in this general range all week. So I see that on Friday, we attempted to move above the range in this little section. You see what I'm saying? And I talked to you guys about a concept called the accumulation, manipulation, distribution concept, which is abbreviated for AMD. So what's something that could potentially happen out of consolidation? We went over this maybe a couple weeks ago, but we talked about out of consolidation, we either, if we're breaking out into our higher time frame direction, we might break out with a fair value gap, of course. My fault, that was a terrible drawing. We might break out with like a fair value gap on top of the consolidation, or we might fake people to one side and then go to the other side. And so the reason why when I see the consolidation breakout happening right here, the reason why I'm anticipating this being an AMD versus a continuation is because, yeah, we breaking the consolidation, but we didn't break it with any type of fair value gap on top of it. So that's extremely, extremely suspect to me. That's one reason why I could tell that this is a fake breakout. And I'm gonna draw the consolidation real quick so everybody's clear on that. So if you just look at just this rectangle, you can see that we stayed here the entire week. Like this big green candle is actually from the previous week. So, you know, TradingView is a little janky with it sometimes, but like, don't include that big green candle. That is the previous week. We stayed here the entire week inside of this purple rectangle. And then what do you see? You see Thursday, we try to finally break out, and then we're headed into Friday now, and we're looking to see like, okay, is this a real breakout or not? And so seeing how we left this area without any energy, right? Without any energy is super suspect. And how do you know energy in the market? A lot of you guys are thinking in your head, oh, use the volume indicator. No,
Gaps.
Exactly. Thank you. Appreciate you. Gaps, right? And so gaps, in other words, fair value gaps. That's something that shows real energy. We don't even need the volume indicator and like that. And so volume indicators actually could throw you off because I don't know what they are at this time. I don't check them, but they really could throw you off. You don't need to see anything besides fair value gaps. And plus you could base stop losses on fair value gaps. So let's say hypothetically speaking, let's say we did make one on top of it. Okay, if you're just using a volume indicator, it's not really telling you when you're wrong. So let's say we came back into that fair value gap and then we consolidated for a second and then we started to break under it. You know, for a person who's basing their play on that fair value gap, they could just stop themselves out right there for a much smaller loss. But somebody who's using like a volume indicator or whatever, it's not really giving them a time to get out. Like, when do you know you're wrong? Like for me, my stop loss, if I was going to take that play, would be based on this price holding the fair value gap that's hypothetically there. So if we don't hold it, I'm gonna just get out and take a small loss. You feel what I'm saying? Unless there's something that I want to hold price with, maybe right here as well. This is situational, so I don't want to like go down a rabbit hole. But I'm just saying, like, I'm just giving a quick example of why it's better to rely on a fair value gap versus a indicator. Okay, so another reason why I felt like this was a fake breakout outside of the inability to leave a fair value gap. Reason number two would be me doing surgery on the breakout. Now, what do I mean by surgery? What I mean by surgery is I go down to lower time frames and I'm looking for certain areas I would expect to hold. Okay, so couple things, man. I'm not even gonna go too in depth on this out of respect for the mentees. But what I would say is I'm gonna talk to my mentee because they in here. Mentees, you guys can see what you should know the type of delivery we should get to the upside. You feel what I'm saying? All right, cool. So you know what type of delivery we should get to the upside, mentees. Right? That was a 4 hour. That was a 4 hour. Mentees, that's the 4 hour, right? You know what it should look like. Bet. Let's go to the 15 minute. I wonder why, mentees. Cough, cough. Yeah, I'm I'm throwing hints to the mentees. So now when you come to the 15, when I seen price not respect this fair value gap here on the 15, automatically I'm like, oh yeah, now we're not gonna have a continuation to the upside. This fair value gap is extremely important right here. This one. All right, so let me remind you guys of something that I've talked about before. A lot of people know about it, but not everybody. You can look at impulsive price legs and measure them. So if I have a price leg like this, right, impulse move to the upside, I can measure it using the Fibonacci retracement tool, which is located on TradingView towards the top on this icon right here. Put an arrow out and then pick the one that says Fib retracement. You can customize it. Yours is gonna look different than mine. I'm about to pull it up right now because mine is customized. But either way, what I'm gonna do is, because it's a bullish move, I'm gonna start at the bottom of that bullish move, which is the bottom of this green wick. I'm gonna take it to the top of that move. Um, I'll take it to the top of that move, and then I'm going to measure the retracement. So essentially, if price comes back under the 50%, that means that it retraced over 50% of that price lag. So this is called a discount area. Imagine like in real life, like literally this asset, the NASDAQ went on a discount on this time frame. So we're in a 15-minute discount, and that brings us, and I like to look at fair value gaps inside of that discount area. So there's a 15-minute discount fair value gap right here. This is something that I would build an if then statement on, right? This discount 15-minute fair value gap. Mind you, price has never used it yet, so that's a very good sign. So you see, at first we tapped into it and then we tried to trade higher, but then price fell short and then boom, invalidated it right there. Once you close under that fair value gap, it's now considered invalid. All right. Now, inverse, whatever. But the point is, once I seen us invalidate that area, I said, oh, we're not gonna have a continuation on the 4 hour. So each, oh, my bad. My bad, yeah. I don't know why. I definitely just my fault. I pressed the wrong button. But anyways, so immediately I'm like, yo, this 4 hour is gonna have a massive pullback. So back to the 4 hour. Back to the 4 hour. I'm now thinking about what is our 4-hour target? Well, if this is an AMD and we looked at the accumulation and we just seen the manipulation, which is the upside move, we should be moving back towards the downside, and I might target the lows. Now, in this scenario, mentees, I have a question for my mentees in here. Mentees, would you guys target the lows or would you guys target the lowest body of this consolidation? The lows or the lowest body of the consolidation? Which one? Which one is a bet? Which one's a better target? Thank you. So Lady Kels, one of my OG mentees, she said lowest body. Bell, another mentee, lowest body. Exactly. And I got some other people in here. Mo, shout out Mo. We saw people saying body. So good stuff. Ash Cash, Marcus. So shout out to mentees and everybody saying lowest body. And there's certain times we want to target the lowest body and certain times we want to target the lowest wick. Now, I'm not going to necessarily get into which one. I'm not gonna get into like the times you want to strictly go lowest body because that is mentorship source, but I want to at least impress upon you the fact that price does target the lowest body sometimes. It does not always go to the lowest wick. So if you're not familiar with that concept, let me explain it to you. If you look at any given pivot point, my bad. If you look at any given pivot point right here, right? Obviously there is a low of the pivot, but there's also the lowest body at the pivot point. So that would be this target right here. That is the lowest body at the pivot point. And so when people learn liquidity, they say, oh, there's liquidity at the bottom of the wick, right? That's something called sell side liquidity, meaning there's a lot of stop losses at the very low. That's a fact, and it's true. Don't get me wrong. That's still sell side liquidity. But in certain scenarios, price might make a down move and not go for sell side liquidity. It will go for the lowest body, and then you'll get a nice reaction out of that. It may have a whole reversal, or it might just, have a deep retracement before the next move down. But either way, if you're in a day trade, you might have a limit order somewhere down here, and you'll never get filled, at least not that day. And so that's tough. So it's important to know, which times price is targeting lowest body versus other, and like Michael said, at the end of the day, he just goes for the bodies to be safe. So if you don't know, because obviously I don't share that gem for free, when we like to choose lowest body versus lowest wick, at the end of the day, you can't go wrong by just targeting the lowest body every time. So if you just want to look at it as like a safe target, you could always do that. I call it the safe target for a reason. So that same thing applies to pivot points at highs, just like it applies to pivot points at lows. So we talked about lows, but yeah, in another instance, you might just target the highest body at a swing point. You feel me? All right. So with that being said, this is the target we have. I'm gonna go ahead and label it right quick. I'm gonna say 4-hour lowest body right there. Yeah, it was good. If you have any questions, just throw it in the chat, and then I try to answer those as I go. If I miss it, I try to spin back at the end of the recording. But just thought, man, I'm trying to, because I'm on recording, I try to keep it moving as much as I could. Bernie said, body, yaddy, yaddy. Facts. Whatever help us remember. So here we are. This is a 4-hour cool. We know what the target is. You guys know why we're not expecting further upside. We talked about the way that it broke out with suspect, and we talked about invalidating the 15-minute discount. So this was our if then statement. Remember, if we're bullish, this will work. If we're not bullish, then this will not work. Cool. It did not work. Like, it did not work. Therefore, we are not bullish. And immediately we switch biases. Immediately we say, bet, what we looking for on the downside? Cool. And that's why we went back to the 4-hour to identify our 4-hour target. And this is the lowest. This is our 4-hour target right now. So I'm gonna just pause to let your brain catch up to what I'm saying here, because people often ask, Rel, how do you know where the market is gonna go, or how do you figure out what the objective is and everything? Like, obviously there's some things I can't get into on these free classes, but I just want you to see that what I'm really doing ultimately is building if then statements on very important areas, and that I understand things that the market tends to trade for. So once I seen us invalidate that area we talked about, for example, I understand that the 4-hour must be looking for a bearish objective. And so what bearish objective do we have in the 4-hour right now? And right now, I know the most likely bearish objective for the 4 hour is the lowest body on the 4 hour. And so now, as I watch price drop that day, any pop, guess what? I'm shorting it. Any pop, guess what? I'm shorting it. Every pop, guess what? I'm shorting it until we hit our objective. Once we hit our objective, then you want to see what price is doing there, and then you want to see, hey, is that really the target today, or are they going to go for like, a different objective? You feel what I'm saying? Because then we have signatures that can help us know if we're going to continue or not. So it's like it's bulletproof, because regardless, you could still use certain signatures to let you know if price is going to continue to dump. But this is our low hanging fruit objective. So let's hop into like the lower time frames. And then really quick, so the question was like, why don't you have the inversion as a reading for the bullish reversal? Because I mean, it's not I wouldn't use it as a reading for the bullish reversal more than I would say it's something that we might use to support a bias I already determined. I don't look at an inversion first and then use that to give me sentiment. I get sentiment first and then I use inversions. There's a difference. It's a difference. So the stuff I said is what gave me the bearish sentiment. An inversion is just a PD array. So I'm always gonna get direction first and I'm gonna get PD array second. People choose PD array first and then get direction second, and that's why they get caught up in the market matrix. It's like you have to know how to get objectives first. Then you find your PD array second. That'd be the difference. So I hope that makes sense. But all right. So let's move this along a little bit. Let me go to the 1 hour right quick. Yeah, and every week we got new people. So you see someone says in the chat, like, what's a PD array? I got you. To make it simple, it's areas on the chart that we tend to use for bounces or rejections. So, an example of a PD array is a fair value gap. An example of a PD array may be an order block. These are things that people tend to use to cause bounces and rejections in the market. Now, I wouldn't say prior support and resistance, especially because I don't trade support and resistance. I actually despise support and resistance and patterns and stuff like that. And that's me. I'm not saying people can't make money off of it. I'm just talking about it has nothing to do with anything that I do personally. So now it's not prior support and resistance, but I would say like, and I talk about this in my free course. So I really do suggest y'all get the free course so you guys could at least get more familiar with certain vocabulary. But an example is this. I got an example for you right here. So this is what we call a fair value gap right there, what I just drew. So what did price do when it traded backwards, right? We went up, it started to trade backwards, and you're saying, dang, is this a reversal or is this a pullback? Well, if you have a PD rate, such as a fair value gap, that's like a trampoline. That's something that can help price bounce. So we want to know how to recognize PD rates so we know what price could pull back for. Notice that price pulled right back into this fair value gap and it launched straight to the upside out of there. So that fair value gap acted as a trampoline. Once again, a fair value gap is an example of a PD array, and PD array stands for premium discount array. Me going into what premium discount is just, I'm gonna go down a rabbit hole. Just pull it to the mentorship so I can explain everything in doses. It'd be hard to stuff everything into one small free class, but I could explain everything obviously in much more depth. So let's move. Did I go too fast? No, I don't think I did. What is this? 4 a.m. Cool. So you see, we dropping off here. This is the London session at this point. You can see 3 a.m. was pretty bearish. That's why I like to get involved in London. 4 a.m. is super bearish, and let's see what 5 does. 5 a.m. you're getting a little bit of a pullback, but remember, what is our bias today, everybody? Based on everything we talked about, our bias is the lowest body down there. Exactly, we're bearish. Exactly, good stuff in the chat. We're bearish, and we're bearish into the lowest body. So all of a sudden, guess what I'm paying attention to? I'm paying attention to this fair value gap up top, and I'm paying attention to this fair value gap right here. So if you wanted to know what PD arrays are, this is what I mean. If price does reverse after this, I'm expecting this PD array to reject us back to the downside. You know what I'm saying? And of course, there's extensive knowledge on PD rates and how to use them and the best ones to choose and which ones to ignore. Of course, of course. But I'm trying to give you guys an overview in these free classes as much as I could. So, there's a bullish PD rate here. We talked about this one a little bit ago. This was something that kept us bullish. So now, am I expecting us to use it again? No, not at all. There's two reasons I'm not expecting us to use it again. One, it already did its job. It generated a brand new high in the market. It did its job. Another reason is I don't care about bullish fair value gaps when I know that the market is bearish. So I don't care about nothing. Look, there's another bullish fair value gap that exists down here. You think I was tripping on this when price came into this area? I never even put it on my chart. It's not on my chart. I'm not paying attention to it because I already know what the market is trading for. I'm literally bearish until price tells me not to be bearish. So here's where I would get bullish on the market. I would get bullish on the market if we traded towards the upper half of this fair value gap right here. I would be suspect on the market if we even touched this fair value gap in the first place, because really and truly, the best bearish delivery in this specific scenario is to use this one to go lower. We don't even want price to come to the one on top. There's reasons for that. Mentees, you guys should already know what I'm getting at, but I'll just hint at it a little bit. Look at the type of area we're trying to claim, mentees. So it already is helping you know what type of delivery to expect. You feel what I'm saying? So there's this fair value gap right here is such high probability, like it's ridiculous. Like just full put your account on that at this point. I'm just playing, don't do that. But you know what I mean? Like we don't even really want the one on top, but we could leave it on our screen just for the culture. Copy. So here we are. It's 5 a.m. You see we left this one. Your trade plan at this point, if you just got to the chart, is like, okay, we want price to come down here. You may look for trade opportunities if price could trade into this purple area. Let's count how many points the purple area is right quick. It goes from 660 to 683. So that's a 23-point stop on the NASDAQ. You could just size that appropriately at this point and just live with your results. You feel what I'm saying? Because really and truly, let's say you got it on that fair value gap and you literally left it alone, went to work, you feel me, didn't care about the chart. You're risking 23 points to make, let's see, it goes from, let's say 660, what is that, 235 points. That's a lot, people. You're risking 23 to make 235. I think that's a great risk to reward. I don't know about you, So I'm getting into that right now. Sim said, where would you have entered for the sells? Yeah, so I'm right now, I didn't get into any sells yet at this point. What I'm trying to help everybody do so far in class is to help us build a trade plan, a valid trade plan, and giving you guys the logic on a sound logic for your approach. That's all I'm trying to help you guys do right now. And then we're going to get into the actual entries and exits we could take on this. But I'm taking my time with the pre-market analysis because I think that's where people struggle the most. If you guys have solid plans, it'll really help you stay on the right side of the market. So just think about it. Think about it. For this whole demonstration, once we go down to the 1 minute, the 5 minute, the 15 minute, whatever, every time you guys see, price starting to pull back, are you panicking? You can't be panicking if you know the market wants to go to the yellow line. What are you panicking for? There's nothing to panic about because you know where price wants to go. So really, like I say, retracements are opportunities for people who understand where price wants to go. Retracements are things that give you a panic attack if you don't know where price wants to go. For me, I'm like, oh, it's lit. Finally, thank you. I'm glad price pulling back. I'm about to get a bigger bag now because I'm going to get a better entry for this play. You feel what I'm saying? So right now, I've been helping everybody in this demonstration build a valid trade plan. Right now, we know where price want to go, and we're going to use this area to take us there. So that's 5. Let's go closer to New York. 6, 7, 8. So clearly, we consolidated right here. You can see at 8 a.m., we pushed into this area. Let's go down in the 15-minute right quick. All right, so once again, we really want this purple area to reject us to the downside. It's very likely that it will. Contextually, it's very likely that it will. We talked about why once we were on the hourly. And so, like I said, there's room for a person. I mean, we could do it just cause. I'm not saying like you have to do this, but you literally could technically just get in, have a stop loss slightly above and just let it cook. And the reason I say slightly above for people who are new to fair value gaps is we got this fair value gap from the hourly, right? So understand that the hourly time frame, we could have hourly candles that wick above the fair value gap. But as long as the hourly does not close above the hourly fair value gap, it's still valid. So once again, you could have wicks that go above it, but as long as the candle buys, that's a terrible candle. Oh my gosh. As long as the candle bodies hold the area, it's technically still valid to send us back to the downside. So someone said I'm lost in how you determine the market direction. Just for time purposes, I can't go back and explain all that again. But remember that this does come out on recording, so definitely just rewind that part. 'Cause I think it's very important to understand that, you know. But yeah, you said I drew a lamp. Chill on me. All right, so yeah, there's room to do that. So let's see if we could like I mean, you literally could just take this entry. There's your entry right there. You know, you have a 20-point stop, bro. You be all right with a 20-point stop. But let's like I said, let's move towards opening candles. So that's 8:45, 9:15. Okay, so that's 9:15. Let's see what happens here at 9:30. So even on this time frame, right? You see we're in consolidation here. I'm gonna erase this. Look, just understand you could have entered, you would have been good for the rest of the day. Just put it like that, okay? Let's get entries outside of this now. Okay, so you guys can see there is consolidation. I don't like to trade on the inside of that. So for me, it's the same thing. I'm gonna probably want to take some type of an entry with a solid breakdown. I think that something that's very bad for price is coming back under these lows. I wouldn't want to see that if I'm a bullish person. If I'm a bullish person, I don't really want to see price come back under these lows for real. You know, but you could definitely wait for more confirmation. I didn't even check in with ES. I meant to do that, my bad. Let's see what ES is talking about at this time. ES is the S&P 500, my people. And of course, every week I give my disclaimer. I'm not just talking futures, I'm talking price action. Everything I say applies to every market. So if you're an options trader, use the same strategy in the options, forex, anything you trade, crypto, it's the same thing, and every time frame is the same. All right, anyways, so look, we're looking at the S&P 500 right here. Notice what they did. They had a fake breakout to the upside, and now they starting to come down a little bit. Um, they kind of look for the most part identical, and so let's see what happens at 9:30 here. All right, so 9:30, you get a crazy candle, right? Like the up and down type thing. You know, we wicked under these lows. We never got a closure. Okay, cool. Let's see how we might want to trade going forward. Another wick under those lows, never got a closure. A lot of nonsense, right? Really, we're just in consolidation, so we chilling. We chilling for real. Cool. Now Nasdaq starting to break down. Okay, in my opinion, I think losing these lows, well, the lows we talked about before, first of all, but also losing the lows of that green wick is a pretty bad sign, and I would want to see price continue to break down. Now, the thing that's suspect to me is, I'll actually let me move it forward a little bit before I say that. Hold on. Okay. So first of all, we got a bunch of dojis before we got that flash candle just now. A bunch of dojis. So really, really tricky open. Very much okay to stay cash in that moment. But I do want you to keep in mind that we are rejecting the area we were supposed to reject. So you cannot forget, as we trade this 1 minute time frame, I cannot have anybody in here forget that we're rejecting an hourly bearish value gap that we wanted price to reject on. All right. So Steve said, what if you waited till it filled the rest of that fair value gap, then go long? I wouldn't do that because on this fair value gap, hold on. This fair value gap that Steven is referencing in the chat, you don't want price coming to the lows of this fair value gap to go higher. That's a very suspect delivery. I'm not saying it can't happen. It's a probabilities game, but I'm saying probabilities wise, it's very unlikely that in this context, we're going to go to the bottom half of this fair value gap. That's actually why I said for us to close under this red low is a bad sign. That's why I said that in the first place, because a bullish person could have been, you know, kind of optimistic seeing price respect the upper half here. Like, I know it consolidated, but it definitely could have just gone to the upside if we were bullish. You feel me? So if I was a bullish person, I would be watching the upper half of that fair value gap. And that's why I said earlier, like us closing under that is a bad sign to me because it shows that we're not using the upper half. I do not want price to use the lower half in this scenario if I'm a bullish person. You guys know I'm not bullish at the moment, but I'm speaking hypothetically. So now you really wouldn't want price to fill this out to go long. Not at all. Yeah. Nah, definitely that's what it's about, bro. So cool. So we lost the area, boom. We look pretty bearish, I can't lie, but the thing is, people, look how we're moving. And I'm about to show you guys a small loss I took on live. I just because I live traded this with the members or whatever. And we made good money that day overall, but I'm gonna show you the loss we took before we started winning. So look, this is 937, whatever. We ran London lows right here. Notice we ran London lows right there. Okay, cool. You can see here, let me go down to the 15-second right quick. As we ran London lows, price is starting to come up pretty nicely here. Let me show you ES at the time, by the way, real quick. Let me show you ES's London lows. Hold up, because y'all don't really hear me yet. Y'all don't hear me, man. ES's London lows is all the way down there, bro. We not even close. So what am I thinking at this time, people? Think about it. I'm gonna tell you my confluences right quick. So, because I still don't think it's not a bad setup that I took. Like, I don't look at it like, oh, that's a bad trade. Like, nah, it's valid. On a different day, it might have worked. But I tried to get like a scalper basically to the upside to maybe run these highs or something. Like, because look, we chopped our way down, which to me is a lot of times when you see price move like this, it's fake movement and it's setting you up for some type of a sweep. So when I look at price doing that, I'm like, that's sus. I hate how we moving right now. We have not made not even one fair value gap to the downside. It was super choppy. There's no energy. That's why there's no fair value gaps to the downside. On top of that, we just swept London lows, and the S&P 500 has not even gotten close to London lows. And so here, like Keisha said, that area was tricky. It definitely was. I'm like, you know what? Maybe they about to just give us a quick SMT divergence type of play. And so when I seen the 15-second push up like this, hold up, I'm gonna show you. Right now, by the way, what I'm waiting on is a fair value gap to the upside. All right, that's what I'm waiting on. If I notice a potential SMT, I don't get in right away. Don't miss that. Don't miss that detail. That's the most important detail on SMTs. I don't get in right away when I notice it. I'm waiting for some type of fair value gaps in the direction that I'm eyeing right now. You know? And so, and exactly like Mo said, all of this sideways action was engineered liquidity. So I'm like, maybe we about to go and take that liquidity. So let's see what it's here for. I bet. So, what am I waiting on? I'm waiting on a fair value, right? To the upside. I still haven't gotten one. I'm chilling, right? I'm chilling. Still ain't get one. Cool. Hold up. Okay, now what happens? We get one. So at this point, really right here, to be honest, this is where I go long. Okay, so I go long here. And for me to want to stay in this play at this moment, oh, by the way, part of my confluence for going long is trading past the lower half of this bearish fair value gap. Notice that the lower half of it already caused a rejection, right? We rejected it, came all the way down to the bottom of that green wick. Cool, so that's a good sign, but guess what? We came back to it, and now we traded above it. That's, to me, that's an invalidation of somebody who's bearish. Like if I was a bearish person, I'd be like, dang, I'm about to be wrong. And also simultaneously be making a bullish fair value gap right there. So yeah, absolutely feeling like, yeah, we about to have a nice move to the upside. Everybody, let's make money. Let's get it. Let's go ahead and take back this whole choppy area that we engineered. Let's have a move up to here right now. Let's do that. Nice little play. But what is my stop loss? My stop is, I'm basing this play on, is price gonna respect the fair value that we just created? So I'm about to take a loss, everybody, but I want y'all to understand that based on the if-then, understanding how to make proper if-then statements can keep your losses ridiculously small. Understand that if I'm entering at 615 and my stop loss is at 608, That's a 7-point stop. Maybe stretch it to 605 and have a 10-point stop. It doesn't even matter. These losses are ridiculously small, and it's based on certain trade ideas. Like, it's not based on just, oh, we green, let's take buys. Like, that's guessing and that's gambling. Like, I'm telling you the logic. It's like we chopped our way down and we have an SMT and the Nasdaq formed a bullish fair value gap while invalidating a very important bearish fair value gap. That's a good setup. There's a lot of confluences for some upside. It just didn't play out. That's all. Um, so a question in chat says, so you wouldn't have bought puts on the downward chop at all? Um, I feel like at this moment in the market, I think if you would have caught the entries up in here, that's valid. I don't start trading on my live typically before the bell, typically. And I showed you guys what the 930 candle looked like. It was like a nasty doji thing. 931 was a doji, 932 was a doji, 933 was a doji. You know what I mean? So like those weren't to me good entries. Like you would have had to catch the entry in the pre-market for me to say the risk to reward was valid. After that, I need to have a sound reason to get into my trade out on a day trade level, especially if I have people trading with me on live. You feel what I'm saying? I'm gonna always be responsible if I got people trading with me, especially. So we need to have a sound entry and stop loss. You feel me? So well, yeah, before the chop was pre-market, so that's what I was explaining right there. The price move upward from the London low wick. I'm not sure what you mean. Are you asking like why it's going up? Maybe I don't know. I don't know if I'm answering your question properly, but price at this moment looks like it's trying to sweep, meaning slightly go under some liquidity to go higher. So I'm just entertaining that play. So let's see how it work out. All right, cool. So price at first going our way. This looks good. Things going good. Okay, cool. Looks great. Okay, right now I definitely don't want price coming back to this fair value gap. And so this is what's also dope about like understanding signatures. I don't really want price coming back to this fair value gap in this context anymore. When I first got in, I was cool with it. But once price moved to right here, I now don't want price here. So if I was being ultra conservative, I really could have stopped out just about break even. But I still, let it cook. You feel me? I still, have my stop like maybe right here or something. And just say, like, you know what, maybe they're gonna use that fair value to go higher. They don't, cool. But at that point, then a person can start looking for bearish setups. So the reason I say you can start looking for bearish setups is because price proved that it's not sweeping. It's not sweeping London lows. If it was sweeping London lows, it would have continued on our entry. The fact that we got stopped out and it's now moving lower tells me that we're not sweeping London lows, and we may just immediately go for our bearish objective down here. So immediately I said, forget scalping to the upside. Let's just play the dominant direction because they're not doing, intraday manipulation. They're not doing that. That's what I was trying to play, like a little manipulation move before they go lower. They're not doing that, and it's okay. Let's just rock with what the market is telling us. And so at that point, and by the way, you can see ES still at this moment has not run their London lows, which is the yellow line. And so I'm watching, but at the same time, I definitely feel like we're bearish. And so as you see now, ES runs those lows. Now things look good for more for continued downside. Keep in mind as we're dropping now, guess what you see? As opposed to before, we were dropping without fair value gaps. That's what tripped me up. But now we're dropping with fair value gaps, right? So now this move is a lot more believable because we have 3 fair value gaps that we just made on the downside. This is great. It's more believable and stuff. So, at this point, we're in the move. We have stop losses based on fair value gaps. Fair value gaps we want to see respected. And at that point, you really could just hold your trade as long as price is respecting these areas. You can hold your trade to your target. Now, so we're in this trade at this point. We're severely in profit. And I'm going to show you how we start scaling out. And I don't really need ES anymore. It's okay. The only reason I needed ES was to show you guys the divergence. So let me make this NASDAQ only. So really quick, let me show y'all. I mean, this is pretty clear. We know we get in and we play downside instead. We lose 8 points, but we're making a lot, a lot of points. All right. So now, oh yeah, that's what I was gonna say. Okay, yeah. So as we get closer to this target, this is when I might go down to the 15-second time frame as I get closer to my target. So I don't stay on the 15-second the whole move. Like, people see me on the 15-second, they gotta understand that I'm on the 15-second in specific areas. Like around here, I'm on the 15, I'm on the 30, and I'm analyzing price much closer. So as we get, closer to our target, price start playing around. And for me, I start to scale out. In this scenario, I'm scaling out if I see price invalidate any of these fair value gaps. There's like two small ones. There's a small one right there if you can see closely, and there's another tiny one at the bottom. I'm cool with as long as price respect this purple rectangle, I'm gonna hold my trade. If it disrespects it, I'm scaling out and I'm holding runners. You feel me? So let's see what price do. It looks good so far. Then it come up. I'm like, all right, But as far as holding trades, something I want you to take away is, don't just panic every time you see a green candle in a bearish play. You got to ask yourself, like, all right, what could help me hold the trade right now? So I'm showing you something that would help me hold the trade is this area. And if it gets disrespected, I'm building if then statements on that. I'm not saying I'm gonna play, the bullish reversal and nothing like that, but it's telling me, like, get some contracts up out of there. Like, yeah, I believe in this target, but what's the saying I always say? What's the thing I always say? We don't marry what? We do not marry destination. We marry delivery. We do not marry destination. We marry delivery. So my destination is the yellow line, absolutely. But it gotta deliver how I need it to. In this context, I need this to be respected right here. Ain't nothing else to me that I want to use for rejections in this section. So nah, this is the only thing I'm looking at. And so here we are. It's respecting it so far. Bodies is holding the area. Things look good. Copy. Playing, right? And then boom. All right, cool. We start trimming crazy. You start trimming and we holding a runner. All right, we holding a runner. And the runner was being held based on, I believe, this area. Now, this is a little blurry to me, but I know he was holding a runner at the time. It might have been the 5-minute bearish fair value gap, but don't quote me on it because it is blurry to me. But I just know we started scaling out of contracts and we had one con left, and then eventually trimmed that con. Because you see, they started playing like, bro, look at this, y'all. They really started playing like, come on. Like, yo, just hit TP. Y'all ever know when y'all going for TP and price just dancing around it? Like, it's frustrating, but it's cool. You just gotta, take what the market giving you. And then it did this. I'm like, okay, bet we definitely hitting TP now. And they said, psych, you thought. I said, y'all not serious, bro. So at this point, I'm like, I think actually in this sequence is where I got out the last contract. I got out the last contract based on this green candle off memory. Real quick, let me just put it right here just so y'all can see what I'm talking about. In this context, if we're gonna be bearish for the yellow line, it's very, very unlikely we're gonna disrespect that green candle I just highlighted, that little doji. Very unlikely. And so once again, just if then statements on PD arrays. Now you have to do more, people don't really understand it like that, but if you could tap on me, that would be great, where I could show you how to know which PD arrays to choose to make your if then statements on. Once again, as you study price, as you go through your own trades, I need you to start looking into these areas and determining which ones tend to hold, in what scenarios, because that's what I did. I didn't get my knowledge on how to use fair value gaps the most efficient way. I didn't get that from anybody. It's just from me studying my losses so hard. I have a lot of discoveries in this market on this algorithm, and they're strictly from me just analyzing the chart by myself. I didn't learn a lot of this stuff from anybody anywhere. So I don't think I'm some superhero. Like, I feel like y'all could do the same. It just takes like intensive and intentional studying. That's all I'm trying to say. So like for me, I understand like, oh, I know price usually when it's gonna run the objectives that I know about. it would have respected that green. So that's why I base my stop on that. So when I see price disrespect the green, I say, I bet I'm out of there, bro. Y'all can have that. Y'all probably gonna have a flash to the upside. I don't want to be a part of that. You know what I'm saying? I don't want to be a part of this. You see what I'm saying? You see where they at now? They going crazy. So yeah, I'm fully on my play. I still obviously made good bread because, okay, I exited right here instead of at the yellow. Like, I'm okay, you know what I mean? You still good. We just don't want to marry a destination. We gonna marry delivery. But with that being said, and my bad, I didn't see this in the chat. It said, would using relative highs as a stop loss be a safe bet? I don't use highs and lows as stop losses typically. Man, that's a bit of a rant that I'm gonna go into. So I'm gonna stay away from that for a second. But typically, I don't really use highs and lows as a stop loss. Nah, I think market structure is too slow, and I think market structure misses the market structure lacks an understanding of what price really trades for. Market structure is it tells half the story. There's so much more to what price is doing. You know what I mean? So people who plays stop loss at highs and lows is because they're looking at structure, but really they're taking bigger losses than they need to. Like, they could have peeped that they were wrong so much earlier. Like, I mean, really a good example is literally what we're looking at. Like people that said, I knew I was not gonna get the yellow line right here. That's when I knew I was not gonna get the yellow line. A person who's looking at structure, they gotta wait till price come back over these highs for them to say, oh man, I'm wrong. So, I get out at 440, they get out at 468, they losing that extra 28 points. That adds up over time. Feel me? So cool. Now, right? What I understand is objectives need to get hit. So although we fell short, do I think that like, oh, never mind, we not going? No, it's not that we not going there. It's just that price is gonna retrace for some PD rate first, and that PD rate is not on the 15-second time frame. So I zoom out and I say, I don't think we bullish yet because we did not meet the objective. And so when a person knows where price wants to go, retracements are what? And you're welcome, Jay. Got you for sure. Retracements are what? Who could write that in the chat? Let me see who's paying attention. If you know where price wants to go, retracements are not entries. Nope. If you know where price wants to go, retracements are, thank you, Michael, opportunities. Exactly. If you know where price wants to go, retraces opportunities. So what I'm doing as prices retracing here, like, dang, they taking back a lot of points. We was just down at 430. Now it's at 490. That's a freaking what you call it, 67-point retracement, bro. This is 70-point retracement. That's a lot of money on the NASDAQ. Don't get it twisted. I know not everybody trades futures, but that's a lot of bread letting 70 points go. So, I would not hold through all of this personally. I'm glad I took my profits. I could always re-enter. Where would I want to re-enter? So for me, good people, like I told everybody on the live, I'm looking at this order block, and specifically the lower half of the order block. Now, I was a little more specific on live with why I like the lower half. So I'm not gonna get into that right now. But people who took my order blocks masterclass know exactly what I'm getting at. You feel me? And I don't always look for the lower half in a bearish OB. Some bearish order blocks, I want price to go to the upper half. So it's not about bearish means lower half, bullish means upper half. No, that's not what it is. Don't ever get it twisted. But anywho, we looking at the lower half or whatever for multiple reasons. And so really, when price comes in here, eventually, because it played first, there is your trade opportunity. So you literally can, once you get your opportunity here, you literally could get in to sells, a stop loss slightly above. You feel what I'm saying? And then you could just let it cook to your target. You could just let it cook to your target. Because objectives need to get hit, right? Objectives need to get hit. They have to. They have to. They have to. And how do we know that objective is gonna get hit? The 4 hour told us that in the pre-market. In the pre-market, the 4-hour told us that. So that's why it's important to do that pre-market work that we did here on class so far, because first and foremost, I got this target from the 4-hour. So that's why I knew to exit down here, because I knew if we were going to hit that target, that green candle that we talked about on the 15-second, it would have been respected. So boom, I maximized profits right there off the rip. I saved myself the headache of watching in a 100-point retracement. Like, who wants to sit through a 100-point retracement praying to God that we come back down to the yellow line? Who wants to do that? No. Instead, you could take all your money and use the profits on the next entry and take it right back to the yellow line. You know what I'm saying? And that's why it's important to do that top down. And plus, the reason why I like this bearish order block is because I understand we're bearish. And that's the part that go over people's heads. I don't like this bearish order block just because it's pretty and I learned about order blocks being an impulsive moves and the da-da-da. Oh, I like this bearish order block because I know that we're bearish. Because word of mouth, yo, if I seen a bullish order block, I don't care nothing about it until we hit that objective. You know what I'm saying? I'm not trading nothing bullish because I know we're not bullish. So I don't care if you see the prettiest bullish order block you ever seen in your life, bro. You can put it on your wall at home, put it on your fridge, tell your kids about it. I don't care how pretty that bullish OB is. If the market is bearish, that bullish OB not gonna work, bro. And that's the missing key that I'm trying to say. You have to get sentiment first, and then you get your PD raise second. That some of y'all don't even know how important what I'm saying is. Like, sometimes I be like, yo, why I be saying all this stuff for free? I don't know. Maybe I'm crazy. Because real talk, y'all don't even understand how important some of the stuff I'm saying is right now. Like, y'all have no clue. Some of y'all don't even realize what you're listening to in a real way. And I be saying this joint for the free. I'm actually insane. Because that is like one of the biggest like game changers for me when that clicked. I'm doing this for free. I'm wilding. Anyway, so word. Objectives need to get hit. So that's why we trusted this. For me. All right. And so word. There that go. There that go. There that go. Yeah, I mean that's a demonstration right there. Because after that, guess what happens when objectives get met? What happens when objectives get met, my people? Retracements and consolidation. Retracements and or consolidation. That's what happens when objectives get met. Retracements and or consolidation. This is literally the rest of the day, right? We stayed right in this spot for the rest of the trading day. We didn't move. This was the target. And so remember we talked about, is it an expectation that we're going to run to the lowest wick on the 4-hour, or we're going to go lowest body? Y'all see my mentees at the beginning of class say lowest body is more probable in this scenario. That's because we learn about when to expect lowest body versus when to expect lowest wick. There's a real reason we said lowest body in this scenario. And this was literally the bottom of the day, the lowest body. We never came to the lowest wick, never came down there. So if you're waiting for that, you waiting for no reason. You're not getting your order filled. All right. And KK said, when objectives get hit, expect retracement / consolidation. Exactly. And then that's literally the day just ended. And this is now Sunday. So this is all of an hour ago, basically, what you're watching right now. We've been retracing, we've been retracing. And this is us at this exact moment. So lowest body was the bottom so far. And of course, I'm going to tell you guys what my thoughts are on the NASDAQ going forward, but at least understanding the demonstration. So if you really look, once again, anybody who did enter in that fair value gap we liked, they seen a straight move into their target. Boom. They might be at work, not even watching the chart. They just know they set a 20-point stop. They knew that price was supposed to go to the lowest body today. And they say, yo, whatever happened, happened. Sometimes it's almost better to not even look at the chart, I swear. Because like this is like so textbook for what we do. I ain't gonna lie. Like, this is the most textbook play ever for what we do. Like, the expectation of price to use this fair value gap, not the one on top, right? This one. And then expect price to trade down into the lowest body is probably the most predictable play I've ever seen in my life. I'm exaggerating, but I'm just saying it's like so predictable. So honestly, I swear it's almost better than I watch the chart. Like, you literally could have said, yo, I got a 20-point stop. If I lose, I'll be out of a little bit of money. If I win, I'm gonna make 200 and something points today, and just have a limit order right there and go to work, bro. Easy. I swear. And thank you, Alex. Appreciate you. But yeah, that's where we currently are right now. So I hope y'all got a lot out of the demonstration today. I hope you guys picked up like certain gems from it. At least understanding like the approach, and I hope y'all can see that even when we lose super small, but we win very, very big. And then it's important to know when you're wrong early. I said that on Threads earlier. On Threads, I had a post that said, knowing how to recognize when you're wrong early is arguably more important than knowing how to recognize A+ setups. You know, like remember the little scalp I tried to take off of the potential SMT, and I took like an 8-point loss. Immediately flipped onto the bearish side, and then you see we caught majority of the drop to the downside. You know, and then so a question in the chat says, do you plan like that every day? 1,000 trillion% is the only way I approach the market. I only approach the market from a higher time frame on down. It's top down no matter what. Always, 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 always top down. I'm never just jumping on like, yo, just woke up. Like, all right, here we go. We're the 1 minute at 1 minute. What we doing 1 minute? That's crazy and that's gambling. Because now without higher time frame context, I don't know if I should trust, this order block or not. Because I don't know what we really trading for right now. Like, I need to understand what are we trading for. Then I'm gonna go ahead and build an entire I guess game plan off of that. All right. Absolutely. Okay. So I guess it's time for the chart debate, really. Let's get into that. But I hope y'all like the demonstration. I think there's a lot of gems in today's demonstration. No lie. All right. So it's time for that yacht debate, big. What's the word? Oh, I really stumped the group today. I like this. I like this. Let's talk about it. So this is the free community. I gotta do my sponsors. This is the free community. I give both of my groups the picture. This is the picture that both of my groups got, the free community as well as my mentees. They see the same picture. You should know if price is gonna go to arrow 1 or if it's gonna play out like arrow 2. And let's see what everybody thought. So on the free side, 27 people think that arrow 2 is going to play out, and 29 people think arrow 1 is going to play out. So it's pretty much an even split out of the free members. And that's how I know I chose a good chart debate, when really there's no general consensus on what should happen. So it's really literally debatable. I do love to torture everybody. Let's see what the mentees is talking about. Mentees, let's see what y'all choosing. Like, are you guys able to know what's gonna happen? Because the free people at this point, they low-key feel pretty lost. Clearly, it's half and half. Mentees, what we doing? Every mentee that answered fully all things arrow 1. I don't have not one mentee thinks arrow 2. So at this point, this could get embarrassing for the mentees if they're wrong. All right. So if the answer is arrow 2, mentees, honestly, we gonna have to talk, because y'all about to embarrass me crazy if the answer is arrow 2. So before I reveal the answer, I think it's important to have our commercial break. So what is today's commercial? Today's commercial is about Hershey's Kisses strawberry. It says strawberry ice cream cone. So obviously we all know like the standard Hershey Kiss, just the regular milk chocolate, but sometimes in life it's okay to get a little variation, switch up the flavor a little bit. You know what I mean? And I think that's representative of kind of love and how you love your partner. You got to switch things up. You can't always do the same old. It's not always flowers. Sometimes you gotta take her to a nice restaurant. You know what I mean? You gotta get out the house. Y'all always home with the kids and stuff. Sometimes you gotta get out the house. You feel what I'm saying? Send the kids to the babysitter, whatever. Get out the house. Go enjoy yourselves. Quality time is important. Pay attention to your partner's love languages. Revisit that, revisit that. Y'all talked about it on date number 1, date number 2. Now that y'all 2 years in, y'all not considering each other's love languages no more. I'm trying to tell y'all, man, these are the keys to having a healthy relationship. And it all starts with Hershey's Kisses, strawberry ice cream. Okay, and so that is the commercial break today. Okay, all right. So I'm assuming y'all want the instant app. So let me yeah, yeah, I feel this one though. This is a good commercial, but I ain't gonna lie. You got gems in that one. Hold on. So let me go ahead and get the answer for y'all because I could really go on a rant about that. Word. So the answer here today is arrow number one. So the mentees did not embarrass me. Arrow number one is definitely the is. So we went straight up. Indeed, that fair value gap that arrow two is pointing to, where people think we're going to reject that, is low probability in this context. And I know a lot of people see the equal lows, and so they think we're going for the equal lows, but it's important to understand that due to certain signatures, you'll know when we're going for certain liquidity and when we're going to leave it alone. So yes, you may have learned about equal lows as something that the market tries to target, but who said the market needs to target it right now? For what I'm saying? And you might have learned about bearish fair value gaps and a premium, but as I try to say so often, just because price is at a premium fair value gap that's unmitigated, it doesn't mean it's going to use it to go back to the downside. A lot of fair value gaps are irrelevant and you're going to expect them to get traded through. So how do we know which ones to get, which ones to ignore versus which ones to use, and how we're going to use them? The lower half, the upper half, the 50%, like these are all separate classes. These are all, it's a lot. I mean, all those things is what I break down in my program, in my mentorship program, in individual classes, not stuffed into one little, one session. Okay, but understand that there's a way that everybody, because there's not a bunch of followers, right? Like, let's not disrespect these people. It's just they all learned about these signatures, so they should be able to know whether or not we're going to go straight up or we're going to reject and come down in this scenario. And I think it's important to see that every week we come out here and the mentees consistently get these correct in abundance. It's hardly ever a split decision on my mentees because they understand how to predict price. So just keep that in mind, that it's possible to do that, because people tell you can't predict price, and then I have my people see me do it and they might just think, I don't know, like I'm doing black magic or something, like, but once you see all my mentees predicting price too, now you know, like, clearly it's just knowledge, bro. Like, we not, like, there's just certain things that you'll come across that'll help you predict price as well. None of us are just some magicians up here. All right, so let's talk about what's gonna happen going forward in the market. Speaking of predictions, and we'll start with the economic calendar for this upcoming week. So Labor Day is Monday. Options markets close. The futures market closes at about 1 p.m. Eastern. So if you trade in futures, just understand that it's going to close at 1 p.m. Eastern time on Monday. And so be careful. And the price action tomorrow is expected to probably be low volume and just be, pretty slow. So I wouldn't really trade Monday like that. I'm not trading live Monday either, by the way. If you are a premium member, we're not doing live tomorrow. I see y'all on Tuesday with all that. Tuesday here, PMI, ISM, okay, decent events. I think Tuesday may actually be some decent price action, to be honest. I think Wednesday and Thursday, my bad. I think Wednesday and Thursday is going to be trash because I think we're just waiting for NFP, which is unemployment. So, the first Friday of every month, the unemployment numbers come out, and it's arguably the most important economic event for the stock market. That is this Friday, first Friday of September. September is traditionally a bearish month in the stock market as well. So keep that in mind. But at the end of the day, we're going to trade technicals. So, because I don't care about trends like that, as in like market history. Like September is usually bearish, or I don't really care about that. Like if the candles is telling me we going up, I'm going to be a bull the whole month. Understand? So I'm going to always just trade price action because everything else is not reliable. Okay, now I'm going to come back to the NASDAQ, the S&P, gold, all those other things that people want to hear about. I'm going to touch on Forex right quick, and then we'll get right back to those tickers. So let's go Forex. And, we predicted the chop on the dollar. I told you guys it's going to continue to chop. And it's literally been doing that. And so like I said on Forex, as long as the dollar is in this consolidation, I don't want to touch the dollar. I don't like that. You see where my price alert is at, because that's the next time I want to look at the dollar. Like when it runs these lows, then I'll entertain it again. Anywhere in this little vicinity, pretty much, as long as it's disrespecting this bearish fair, my fault. As long as it's respecting that bearish fair value gap, and as long as it's in this general vicinity, I'm cool on whatever sideways action go on here. I do think it's gonna eventually break back to the downside, but for now I'm chilling on the dollar. And typically when the dollar is in consolidation like this, it is seen across all markets. Like when the dollar is staying still, everything's staying still. You feel me? So that's why you see the Nasdaq consolidating and everybody on the S&P, all that, gold, everything. All right, so not really much to say on Forex, honestly, because like since the dollar is like that, yo, you see what Euro USD looks like. Euro USD is consolidating like that. Let's go to the British pound. They consolidating like that. Like there's nothing to say about Forex this week. I'm sorry. Like I told you guys that there's a chance that this ticket could move higher um, after seeing how it traded. First of all, it's using this bullish fair value gap, right? It was consolidating on this one for a long time, but we traded past it. But like I said last week, I said if we really were gonna basically be bearish, right, it's unlikely that we would have come to right here. You see that red wick? You see how high it traded into that bearish fair value gap? That was super suspect for continued downside. So that's why I said last week, or maybe it was the green wick, my fault. Either way, they're both too high, because last week that means we saw the green wick, not the red wick. So yeah, when we saw this green, that's why I said last week, like I think this ticker is gonna move higher for real. And what do we watch happen? We've been moving higher so far. It may have continuation, but once again, since the dollar is moving sideways, I'm gonna just wait for the dollar to have some trend. USD CAD, this play is continues to play out to the downside, but it's I mean, all right, for continued downside on USD CAD, I would want to see this daily bearish fair value get respected right here. As long as we respect that, I like it. I like it for more downside. I'm just iffy on playing anything dollar related because it's going sideways. So I would just say be careful. That's my only disclaimer. USD Swiss franc right here. This joint, self-explanatory. This is nasty. I wouldn't trade this. So there's no Forex setups I like. Understand that from a monthly perspective. I am bearish on the dollar from a monthly time frame perspective. I am bullish on dollar pairs from a monthly time frame perspective. The daily 4 hour, 1 hour, 15-minute, all those time frames could chop for an extended period of time while the monthly chart stays intact. So understand that no matter what, by the end of whatever chop period this is, I do expect the dollar to break right back down. Even if it retraces higher first, I think it's going to get shorted. All right? So nobody should be surprised if we watch the dollar eventually break down much lower. We watch Euro go much higher. We watch British pound go much higher. Don't be surprised. All right? But I wouldn't trade it right now. Let's talk about crypto, because I definitely feel like this one's interesting right now. All right. Now, so you guys know I've been looking for 126,817 on Bitcoin. We watched Bitcoin climb to 124,517. So we came, $2,000 short, 2,000 Bitcoin dollars short. We were so close to this target, and we've had this target on our chart for quite some time. We've been calling out Bitcoin for a very long time here to the upside, and then we came so close. And something that I wanted to see to hit that yellow line was price respect this bullish fair value gap here on the weekly. I really wanted to see that respected. But what am I saying that I always say? We don't marry destination, we marry delivery. So Bitcoin consolidated on here for quite some time, but the past few days it's really breaking under, and so now it's getting interesting. A nice bearish move on Bitcoin, something that's expected if we're truly bearish right now, is for daily candles to respect this daily fair value gap that we just put in, this daily bearish one, right? if we're truly bearish, it's very likely we'll respect this and come down to 104 and potentially even lower. But right now, I would, like, let's say I was a crypto trader, I would be trying to short this lower half ideally too, to be honest. But I would be trying to short this on Bitcoin to go lower, at least into like the 104s ballpark. But I think it's gonna, looking at a higher time frame, Bitcoin it definitely has a chance to come to 100K again. Basically, this, you see this fair value gap that we used last time. I'm eyeing this move on Bitcoin right here. This is what I'm eyeing on Bitcoin right now. All right. So I want to watch what it do when it get here. I want to watch what it does when it get there. But at the same time, I do expect it to bounce, but there's a chance we can move lower. So in other words, I would just look at Bitcoin moving into 100,000 and change, and then we'll reassess from there. It depends how we dropped into it. If we dropped into it in a staggered manner, I think it's likely to hold it and go higher. If we dumping really hard into it, there's a chance that Bitcoin is really trading maybe for this weekly discount. There's a weekly discount fair value gap right here, around the 90,000 ballpark, which would be a phenomenal pullback for a Bitcoin trader. And that's a great like load up area. I think it's a nice area to potentially take longs. But before I take longs on Bitcoin in an area like that, if it does go there, I would check out what NASDAQ is doing, because it depends. If NASDAQ is simultaneously losing important areas, the market is in real trouble. Real trouble. Because it's just unlikely that NASDAQ is gonna maintain bullish areas and go to the upside, while Bitcoin is losing these same bullish areas and going to the downside. Nah, they tend to move in the same direction. So that's why I said before I like go really bearish on Bitcoin, I will make sure NASDAQ is following suit. Right? Just historically, they move together for real. So right now, like I said, this daily fair value gap that we currently just made is probably gonna take us down to 104, but really more likely the 100 ballpark. 100 ballpark is somewhere to watch. If not, the 90 ballpark is the next place to watch. If this don't hold though, yeah, nah, just everybody just pray. Like, if this don't hold though, I'm gonna just go ahead and say, everybody just say a prayer. Maybe make sure you go to church that week, because it's not looking too hot. You know, Ethereum swept all-time highs, so keep in mind that we did sweep on Ethereum. Ethereum's probably gonna get a decent pullback as well as Bitcoin does. You know, but so we're gonna keep our eye on all that. Let's head back to futures very quick. All right, so NASDAQ, man, NASDAQ. Where we at? So first and foremost, let's go ahead and congratulate ourselves for preparing mentally for the chop last week. So think about this, good people. Think about this. Think about how lit it is to get certain information. And the only reason I have the information I have is because I had to take losses to get it. And I think that's the beauty of a mentor, is they lost for you. So I lost so much money in this market coming up that I could just, it's like I lost all the money for you. So now when I'm telling you all the things that I took away from the losses, you don't gotta go through it. People, the old me, bruh, like the old me, bruh. Cause y'all know we've been bearish on the NASDAQ since right here. We called the NASDAQ lower, and we caught a lot of money. Good money was made on the downside, you know? And then we started chopping up. The idea was to come into this yellow line. That was my real main target. So we hit different targets. We hit target 1, we hit target 2, and then we hit target 3. Target number 4 was the yellow line. I was like, come on now, let's get target 4. And then next thing you know, my cousin Jerome Powell opened his mouth and said, good morning. His good morning was so bullish for the market. It was a 400 point, like a 400 point good morning. It was the craziest thing I ever seen in my life. You know what I mean? But what's crazy is, what's crazy, literally though, for real, he literally said good morning, and the market had a flash candle from 10 to 10:01. This is a 200 point candle. We moved another 200 points by 10:15. Insane. So We were still bearish here. One candle sent us quote unquote bullish. So the old me, when I seen this, would be like, oh shoot, we bullish now. And that's where I lost so much money before. But people who were on live with me at the time, because I started my live trade at 10 a.m. is literally when I sent the Zoom link. So as I sent the Zoom link, like we're watching, price like what the heck? And then we played a little upside, played a little downside, and that was it. But anyways, so my point in saying that is word. Right here, I said everybody, we're gonna chop on the NASDAQ from now into next week. At that exact moment, I said we're gonna chop, we're gonna go sideways. So think about the power of that. You feel me? Like the power of watching this candle hit the market, this big green candle, and immediately saying, we're gonna go sideways right in this area. We're gonna go sideways right here. That's lovely because now headed into next week, which first of all, look what Friday did. The rest of that Friday was like this. That's the end of the day. So avoided chop because we knew it was coming right there. And then now it's about to be Monday, Tuesday, Wednesday, Thursday, and Friday. Knowing that we're gonna stay in this range. So anything to the downside or upside, I know is gonna be short-lived. And so many people chopped up blue accounts, all that type of stuff inside of this chop. While people who like listen close really ultimately knew that we were gonna stay in a range. So there was no need to be in there full point your account, heavy size, playing every high, every low, looking at these fair value gaps when understand that if the market is gonna be moving sideways in a range, the fair value gaps inside of the circle are low probability, bruh. It's low probability. So for example, y'all see this bullish fair value gap right here. That's a low probability fair value gap. Why? Because it exists inside of our range. So that's why price didn't even use it. It just filled it in. It didn't use it to bounce or reject. Understand? So it's like people in here trying to take all types of what they feel like is an A+ setup, but it's not, inside of an area where we already know is going to be chopped. So really, I didn't trade my main account the whole week. So it's like good to know when to just chill in the market and not deal with the headache that everybody else is dealing with. Like this drop that we played on Friday, I caught that with my side account. And so that's also a suggestion I have, is that you have main accounts, you have side accounts that it's like, you know what, I'm down to potentially lose money on my side accounts, but I want to be very protective of my main account, but anywho, so yeah, that's last week. So literally we called out a range. Even last week in class, I told you guys it's gonna range, and it definitely did. I told y'all, I said, look, I don't think we're gonna actually make this move to all-time highs. Remember, Jerome Powell just said, oh, we're gonna potentially cut interest rates, whatever that. I still said, no, I'm not really believing it, because I don't care about news, I care about technicals. Technicals told me we're gonna go sideways, so we went sideways. And that's why I just tell y'all, man, get the knowledge on technicals, stop reading the news for trading. And you can read the news just as an economic nerd. I'm an economic nerd myself. I love it. I love that stuff. I love the stock market. When it comes to my trades, the news don't mean nothing at all. Nothing at all. Strictly the charts. It'll bless you better than anything could. So, I'm sure a lot of people were in calls on this day, for example, and y'all seen what happened. Melted you right back down to to these lows. That's so evil, right? Extremely evil. Yeah. But it's not so evil when you expect the price to stay in this vicinity the whole week. So you got the fake breakout that we talked about, and then price comes back into the vicinity we knew it would be in. All right, now what's next? Kind of the same thing. I don't like this chop area. I don't really want to necessarily give analysis on chop, because to me everything is low probability inside of it. So we have this hourly bearish fair value gap right here that we made. Price is likely to tap into that sometime tonight. Will it reject price? Maybe. You know what I mean? I just told you why I'm saying maybe. I'm saying maybe because it exists inside of our range. Anything inside that range to me is low probability. Like, it might work. It could. I'm just saying it's nothing I'm gonna come up here and say everybody we're taking plays on that favor. It's not one of those. I think your safest bets is to wait for price to trade outside of this range. So I think that's price over last week's highs. I think that's price under these are last week's lows. In between, this in between game right here, be careful. especially because tomorrow Labor Day, so y'all might try to short this and they might make a move like that. Just be careful. Will it work? I hope so. I actually want the market to drop a little bit so I could get some nice opportunities out of that. Remember, we have engineered a ton of liquidity. What do you mean engineered liquidity? Everybody sees all these higher lows that we're putting in the market right here, and they think that this is sustainable, but it's typically not. Usually when we keep putting all those higher lows, we're setting up for a big move to the downside, a straight line move to take out those whole areas. So we keep engineering liquidity. One day this is potentially going to crumble, and once again, September is typically a bearish month. So I hope y'all know what I'm getting at. Very potential to drop down, and if it drops down, I'm still eyeing this June 24th bullish fair value gap. The upper half of that is what I'm still eyeing for price to use to go higher off of. I still like that area for bullishness. I talked about that area a lot in this overall daily time frame range. I've been talking about this purple area as a bounce point for quite some time, but really we just been going sideways for a while, so I don't know. But I still like this area for upside. So I will continue to watch that. If we never go there, hey, it is what it is. But I see what they on. Like when price look like this is a setup for downside a lot of the time. But how far down do we go? I think we just go this far down. After that, if we don't use that, it don't look too good for the markets. But I'll update chart at the time. Right now, I'm looking for that move. If we don't get it and we just keep pushing up, whatever, we gonna play upside as well. All right, so that's NAS. Really the same thing on the S&P. Same thing on S&P. Like we in this consolidation, all that. I would look for price. What is this? The daily time frame? Yeah, under last week's lows. Same thing. Like under last week's lows, we could entertain, maybe some potential downside, further downside. Remember that it's NFP week, right? So if we were gonna make an impulsive move to the downside, it'd probably be closer towards or the day of NFP itself. Like it might be NFP that'll make that move. That's a Friday thing. NFP is on Friday. The Dow Jones, I told y'all, I said this is the golden spot for Dow to see all-time highs. We've been chopping our way, creeping our way to all-time highs. Look, seeing where the Dow is at, there's a chance that we could see price move higher early in September before maybe a move back to the downside. So maybe that's confluence for maybe NASDAQ / S&P kind of doing something like this before a move lower, like just kind of using the tickers to build a story maybe. Because I do feel like the Dow didn't come up here for no reason. I could see the Dow running those all-time highs, but it's something I'm gonna watch close. For real. Just watch your PD raise though. Like right now, there's bullish fair value gap on the Dow. That's important. It's important for us to hold that area if we want to see upside. Like if we disrespect that, I would say that's a very bad sign for the Dow. So I will watch that bullish fair value gap on the Dow. I'm still looking at all-time highs over there. We almost done. Let's see CL. CL is nothing new to report. I told you guys from up here, I said we're gonna run to this yellow line. As we got closer to the yellow line, I told you guys we're probably gonna sweep the yellow line because of how choppy we dropped into it. And you see, we've swept it so far. And so, but really we're still kind of going sideways. So there's just nothing to talk about. I don't see any A+ setup on oil. I would stay away from it until maybe if we lose these lows. If we lose these lows, I can see oil making its way down to 56.15 if we lose those lows. All right. If we don't lose those lows and we start moving higher, I like oil running these highs up top. If we could run these highs at 65.90. All right. This little middle area right here, though, I think it's going to be nonsense. So be careful. Almost done. Let's see gold. Gold, remember we targeted this fair value gap on the 4 hour. Yep, that's what we popped out of. I don't know if y'all remember, we played the down move into that That's what we popped out of. This was a nice 15-minute discount bullish fair value gap for you from Friday. I don't know if y'all peeped that on gold order blocks. People went to our masterclass on order blocks. Y'all might also see a very nice OB in here that caused this massive run to the upside, but you know, that's neither here nor there. This was Friday on gold, a beautiful run for whoever caught that. Obviously, we was on NASDAQ catching downside. People who was on gold caught a lot of upside. But yeah, what's next for gold? I mean, we still inside of the range. I told you I don't want to trade in, so there's nothing really to say. Next time I'll be interested in gold is outside of this range, simply put. So nothing to talk about. And the last but not least, QQQ, S&P. Nothing I ain't say before. I mean, there's nothing to say about this that I haven't said about NASDAQ and S&P. Like literally same vibes, same vibes. So that's it. All right. So ultimately, hopefully you guys got a good game plan. Remember, Monday's Labor Day, NFP is Friday. Hope y'all learned from the demonstration. And if you're watching this on YouTube, like the video, subscribe to the channel, join the free community. That link is in the description. Join my live trades, join the mentorship. Just tap in with me. I got a lot of knowledge to give, and it's been changing lives. And then, of course, you could get the free course if you're a beginner. There's a free beginner's course in the description right now. Tap in with that. That course really could be the start to like a brand new life for you. And so, most importantly, everybody, keep God first in your life. Keep God first in your life. Keep God first in your life. With that being said, that's all she wrote.